All right, folks, we're coming right up to 1 o'clock now. I'm going to go ahead and share my screen. We are recording the session today, so anyone on the call that wants to share it, had something that maybe they missed, want to go back over, share it with someone else internally, we will have this available for you guys today. Thank you, everyone, for joining us today. Today's session is a wonderful panel that we put together for you guys with two top lenders in the franchise space, and want to talk a little bit about the current environment, what we're seeing, and really how to navigate loan programs and build new banking relationships now in 2022. Now, the last couple of years, we've seen some really difficult challenges in business, in lending, obviously having to do with the pandemic. So there's been a lot of challenges for all the folks on the call over the last 2 years, but there's also some fantastic opportunities that we're seeing out there right now for expansion and for building some of these new relationships with lenders. And that's why we wanted to have the panel and the group that we have on today. The big question we want to answer is, so, how should borrowers and brands navigate in 2022, explore new lending opportunities? What are the opportunities that are out there? How do lenders look at you? And how should you be engaging with the folks that we have on the call today? Our first panelist is Jim Valete. He is president and CEO of Q2 Business Capital, which is a subsidiary of First Savings Bank. Q2 and their Torch small business lending program are premier 7(a) products in the SBA program, and they provide world-class service to their franchisee clients. Jim himself has a 37-year career in finance, so really wonderful to have him on the call today. Prior to his appointment as CEO at Q2 Business Capital, he was executive vice president of the small business banking space at First Busey Bank, which is another large institution as well. So he's got a ton of experience that he brings to you guys on the call today. Our second panelist, who we'll be hearing from in the second half of the presentation, is Frank Gallagher. Frank is senior vice president and the national sales manager of the whole SBA program at First Bank of the Lake. And he's been in the industry for a long time as well. He's been doing lending to small business and middle market companies for over 30 years. And he's been specializing in SBA for the last 21 years. He's had numerous positions in commercial lending, on the biz dev side, on credit underwriting, portfolio maintenance and management, loan closing. So really a breadth of experience that we have from Frank. And he's got some wonderful things to share with us today. I want to turn first to Jim. Jim, you know that we're facing some challenges going into 2022, as we talked about, and folks that are on the call have experienced it, but there's also some terrific opportunities. I want to get some insight from you on your process. Talk about your process, what you go through in evaluating a franchise deal and how you kind of approach this market.
Well, thanks, Paul, and welcome everybody. If I don't know you, hope to someday soon. Look forward to meeting as many people as I can here. In the franchise space specifically, what is our process? The important thing that we look at is management experience is a key element of everything we do on credits we underwrite. And very often franchising is there for people who might not have a depth of experience in a particular industry, and they're kind of using the franchisee to replace that experience, right? To get guidance on what's the right thing to do, get their checklists right, understand the business models and the like. So they're substituting their own life experience in a particular field with the support we're getting from the franchisor. So that's what they're paying that initial fee for, support, guidance, understanding the business models and how to be successful in that business. So we look to see how, from our standpoint, from an underwriting standpoint, how is the franchisor going about that with the franchisee? What kind of pre-advice are they getting? What kind of skill set analysis are they getting? We've had several good relationships historically with franchises, and that amounts to getting to know that franchise's model.
Yep.
Historically, we've had ages ago, I'm gonna age myself if I tell you exactly how long ago, but let's just say it was in the 90s, and the bank I was the chief credit officer for had an extensive relationship with Culver's restaurants when they were hitting their big blast of, and there's nothing proprietary that I'm going to going to share. But
Yep.
once we did a deal with that franchise, we said, boy, we really like this thing in the history and how they run their shop. So let's do more of these. Right.
Yeah.
So, and then everyone you do, the analysis time shortened, the comfort level with what's going on shortens. And we began a relationship with the franchisor, knowing what's going on, regular meetings, regular calls, being plugged into theirs and understanding what they do in their selection process for franchisees and how they prepare them to open. And then once they're open, what support do they give them? Because everybody has challenges, right? So you left on your own to figure these things out, or is there support from the franchisor? So
yeah, it sounds like the
franchisor, the better that process we can have for their future franchisees.
Yeah, it's really interesting because it sounds like it's as much about that communication and transparency from the franchisor as much as it is from what you're seeing from the borrower. What was the relationship like with the leadership at Culver's and kind of dealing with that with the management group there?
Well, that particular one was very easy because at that time, and I don't, it's been a while, but at that time, nothing happened to Culver's that Greg Culver wasn't particularly involved in. So we had a quarterly meeting. We would go to Baraboo, Wisconsin. The chairman of our bank and me, we'd go on a quarterly basis and talk to Greg, what's going on? What's your success rate? What are you seeing? What are your plans? Where are you going? And we know what the franchisors or locations that opened 5 years ago are doing. What's going on in the first year with these franchises? Is it a different issue? Things like that. And I can tell you that the benefit of that is when we looked at a deal, we didn't have to recreate the wheel every time we looked at it. We kind of knew what made them successful in selecting their franchisees. And we got very familiar with the business model. So it shortened up because we were able to connect the two of those things.
Yeah.
That ongoing communication was very important to us, and it allowed us to do dozens and dozens of those deals.
Yeah. So whereas you may have gotten comfortable with one or two deals in the beginning, as you start to get closer with the franchise, you start to understand what the development folks are looking for, and you can almost do more deals and be a little bit more quick in your process because you have that buy-in on how they're doing their recruitment and all that kind of selection and that type of thing.
Exactly. Because the evaluation of the franchisor is ongoing. It's continuous.
Yeah.
You're always up to date, and you don't have to spend the time recreating that wheel every time you see a new deal. So that's one of the more successful relationships that I've been involved with. And it was very, very dependent on the franchisor and their willingness to share information and be transparent about what they're doing.
Yeah, that's super interesting. It makes me think too, though, were there any red flags that you look for? What do you look for in terms of when you're having that conversation? You gave the Culver's example, red flags that cause you to take a second look in that process, or anything that maybe you watch out for that folks on the call should pay attention to?
Yeah, I would say the biggest red flag that for me personally in my underwriting team, when we look at it, which is we talk to the franchisor, we find out as much as we can about the franchisor. And if we do get a chance to engage with them, or the data shows this, that they don't really know what they're looking for. What is going to make the franchisee during the selection process successful? Is it about getting that first franchise fee? Are we here churning franchise fees, or are we here focused on making our brand successful?
Yeah.
And very often you can tell that when you talk to people, if they've got a plan, if they're selective in their process, how selective are they, and what are they focused on? So very often we'll talk to them and they're focused on the franchise's success or the franchise's financial success, or look at, we've sold 42 territories, this year. Well, that's good. Who'd you sell them to? When are they opening? How long is it taking them? What's been happening with your operators in the last 4 years? What's the training? All that stuff. So you can tell by the way you interface with these franchisors, what's their reason for being, right? What's their mission statement?
Yeah.
And how much support are they given to these new entrepreneurs, very often in new businesses, when they reach when they get hit with roadblocks that inevitably they all have.
Right.
Right. So are you left on your own, or are we helping here? And is that is that health, is it bearing out in the results of your franchisees? So I'd say the biggest red flag is when we start talking about those particular topics and all they want to talk about is how successful they've been in expansion and selling territories. That's a huge red flag for me.
Yep. And in terms of the fund report, I know a lot of the folks on the call here have fund reports, and I know you're using it in your process. You look at parts of the fund report, like system support and expense commitment, franchisor-franchisee relationship, which, you don't necessarily run to that right away. You might pay attention to historically and success rate and average unit volumes, but as we'll talk about, some of the challenges that we saw in COVID have affected that. And we really are now focusing on some of the things that you talked about, like expense commitment, support for the franchisee, is as important as the historical success rate for someone like you.
Yeah, because those success rates are, it's a big lag, and it doesn't necessarily reflect what's going on today with this unique group of franchisees that are starting up. So we obviously look at those historical rates, but that's a piece of the puzzle. And if they're not up to date with the information that's in the fund report, that to me is also how serious are they about growing their franchise? And transparency with the people who are investing in those franchises. If they're not willing to share current information, that's also a red flag too.
Right. We talk about lack of disclosures and unit economics and things like that. That's some fantastic perspective. And you kind of touched on what I wanted to move towards next, which is kind of talking about how you see the current environment, but moreover, and we started to touch on this, what are the lingering effects that you're seeing from what we experienced in 2020 and 2021 on your business, how you look at the space and how you evaluate credits?
Well, it's been a little wild here, the impact, what's going on, even the way things have changed over the last few months with who's locking down, who's operational, who's sitting rolled up in a fetal position in the corner of their office, all those things. But I will tell you, from a very big picture standpoint for us, is there's so much money awash in the system. There's so much cash.
Yep.
A lot of our smaller ticket demand for loans, under $350,000, the smaller transactions for existing companies, the demand during 20 and 21 was down. And some of that was because there was no business being done. People were occasionally a little skittish to take risks because the unknown is higher. But also there's a lot of free money floating around. I mean, I can't even tell you the number of people I talk to that say, I don't know if I need this, but it's almost criminal for me not to take this loan or not to take this grant because they're making it available to me, which also leads to working capital needs, minor expansion needs. They're funding it with cash because there's no need to incur that debt. Also, to a certain extent, it's in the SBA world, it's hard to prove that they need those loans when they're sitting there with a big pile of cash.
Yep.
So that has been interesting. And in reality, where we sit today, we see more demand. We're seeing more expansion. We're seeing more franchise activity. But the underwriting has become a little more nuanced, right? So how do you separate what's really going on in an operation from, I got my PPP money and I've got my idle funds and I laid off half my staff and we're at 50% capacity and we're doing half the revenue that we did 2 years ago, but we're making more money, right? So there's a lot more nuance in the numbers. You kind of can't take anything at face value. So we're taking a little more time to understand the borrowers, I think, is probably the biggest issue for us. So as these funds dry up, as loan demand increases, which it is right now, it's not like you can just take any particular line item on a financial state, whether it's from a franchisor or a franchisee, and take it at face value. You got to ask a few more questions to understand what's happening.
Yeah, that makes a lot of sense. And it goes back to kind of that deeper level of understanding of looking at brand leadership and, having that comfort level with the concept. I think the big message to the group, and I think that's what a lot of franchisors are kind of experiencing, maybe not fully understanding why they've experienced it, but I know I've heard from other brands that we've spoken to that I've said, hey, the bank that I've been using forever is now asking for this and that and this and that and all these new things that I never needed before. And I think what you just laid out is kind of the why behind that, and why the brands and the operators that we're seeing are either seeing full-on pushback or a demand for more and deeper information than they ever have before. So I think that's just fantastic insight for the folks that are listening here. Before we turn to Frank, tell us a little bit about Q2 Business Capital, the TOR Small Business Lending Program, and what you guys are trying to accomplish in 2022.
Well, I'll tell you about Q2 Business Capital. We're a subsidiary of First Savings Bank, which is located in right in the Louisville area, just across the river in Indiana. We're a boutique SBA lender. We do about 100 million a year in business. Our goals are to double that over the next few years. We're aggressively hiring business development and customer service people to get that done. We've got a great platform that we're building on. Again, when I say boutique, that means we'll consider just about anything. We'll think about anything, but specifically as it relates to the franchisor space, we have done a little bit in this company before I took over, but I've had good success in this space in the past, and it's going to be an area of focus for us in the future. So what's going to be a good fit for us, and maybe it'll be some of the people on this call, I hope, but we're looking for franchisors that are past that toddler stage, right? They're not in their first 5 units or 10 units of sales and territories, where there's a decent amount of history, where you can point to a model and the success of the franchisor and say, okay, we've got a certain amount, whether it's 10 or 20, we've been operating for a few years, so the proof of concept is there. Now this is where we're going to go. We want to go into the Midwest. We want to go into the Southeast. What is your plan? Because we'd love to get comfortable with your model and help you facilitate that plan, right? So similar to what I talked about the relationship that we had with Culver's years ago. Yep. So we think that that's important. We also know that, or we think anyway, you guys can tell me, that works both ways, right? So if we save time by doing the second, third, 15th deal with a particular company, they save time with their franchisees saying, I think this will be a good deal. Q2 will like this, right? So this will be a good fit with this franchisee and their credit background, their management experience, all those things. We know it's going to work for you guys, so it saves time on both ends and hopefully decreases the frustration that's kind of built into this whole system.
Yeah, that's a terrific model for kind of how you're going to build the relationships with the dev folks that are on the call here, and really enable them to kind of turn that process around even faster. You just touched on the franchisor side of things. Any thoughts for specific borrowers? There's a lot that will fit. So why don't we talk about like what might disqualify a borrower, or what should a borrower or franchisee be kind of understanding going into a conversation with you that they should be looking out for?
Yeah, on the franchisee side, and we are aware that a lot of these going to their first unit or first franchise, they might be the first time that they're an entrepreneur. And there's the obvious ones, right? If somebody has a low credit score and doesn't handle their personal business well, it's an indicator of how they're going to run their business. So that's an obvious red flag. It almost goes without saying, but I'll say it anyway. So that's very important. I think when we talk about franchisors or franchisees, and we look at their information, a big red flag for us is when they just flop on the table a standard business projection that was given to them by a franchisor. And when we ask them questions about it, their response is, well, John Johnson at this franchisor, this is what he told me it was going to be.
Right.
Do they own those numbers? Do they own that model? Do they own those projections? Do they even understand what it means? The difference between cash and GAAP accounting, and do they understand the model that they're going to be expected to execute? So that's a big red flag. If somebody is saying, that number says $1 million on there because we were told that that's what it's going to be. That's a big red flag for me. And I think the last one is when we talk to franchisees, we ask about liquidity. What's going to happen when things don't go well? If they don't have a plan B, or if, God forbid, they don't even think there's going to be a need for a plan B, right? No, it's everything's going to work out well. We were told by the franchisor, this works 100% of the time. Don't worry about it. That's a red flag for me too, because they haven't thought about their plan B or exit strategy. And what we do know, at one point, actually at a couple of points, we made 100% touch base with our client base, both franchises and non-franchises. And one thing that's universally true, it ain't going to work out the way your business plan says it's going to, right? So
Yep.
Where did you get the money? How often their parents gave them, family members, credit cards, to tide things over till there was stabilization. The percentage is huge on that. And if they haven't thought about it, or they don't have the capacity to reach out and get over those humps, that's a big red flag for us.
Yeah. That's fantastic. Thank you so much, Jim, for your insights on this. We're going to have some time later for questions with Jim. And as we said before, we're going to connect anyone that on the call that wants to meet with Jim. His contact information is up on the screen. So thank you for those fantastic insights. I want to turn now to our second panelist, Frank Gallagher from First Bank of the Lake. Frank, you also have a extremely deep experience in the franchise space. First Bank of the Lake has established itself as one of the SBA leading lenders in the country. I think you were top 13 in 2021. So a ton of activity going on at First Bank of the Lake. Tell us about the loan program there, who has access to it, and what you've been seeing.
I think you're muted, Frank.
I got him.
All right, hopefully that worked. Oh, Eric,
Yes, sir.
this thing's crazy. I had to reload it twice today. We're a national lender in SBA, so we're looking at all sorts of transactions, specific industry verticals. Franchise last year was about a third of our business. Medical, business acquisition, commercial real estate is where we rounded out. But we see a lot of growth, a lot of opportunity in the franchise space. Folks are getting in the business, and they need, they need that secret sauce. They need that management structure that the franchise gives them. That's why you're paying the franchise fee. So you have that system, you know how to get it working. You have coaching, you have someone behind you kind of showing you how it works. And it helps with your expectations. Folks know what they're getting into, and they're working with people who know what they're doing. One of the things I see, the franchisors are great, but what you really see at times is kind of that franchise community within the franchise concept.
Yep.
When you're talking to folks, they send you a business, whether it's a canned business plan or not. When you ask questions and they tell you, oh, well, I talked to 6 other franchisees. That's darn is, you're almost approving them once you hear that, because that's the kind of person you want. When you hear, and like Jim said, well, that's what the franchise said. Great sales job, but that's not the answer you want to hear. You want someone who's going into it with their eyes wide open, and that's great. We will underwrite the person, their expectations, kind of how they've approached it, and the franchise as well. We dig deep into the FDD. If we have a fund or a BCR, we dig into that as well. I mean, that and the item 19 is pretty much most of what makes up the concept for us. And then we're looking at the person involved. You know,
Yeah, I know in our prep for this, we were talking about I thought it was fantastic the way that you guys really focus on the borrowers as well. You're looking at the brain, looking at the business model.
yeah.
And we already kind of saw it come through there, how you guys really do take a close interest in the people themselves that are actually getting into these loans. When you see, you already started to talk about that a little bit, but what do you see in these borrowers? What have you learned about what makes them successful in this?
You know, it depends on the concept. You know, you have 400 locations. You probably can work with a borrower who might not have as much experience. You have 10 locations, you need someone who's got a little more depth, both in their management ability as well as their financial ability. You
Yep.
need to make sure that they have that backup financially and to kind of work through the times you run into issues. And as a newer franchisor, you need people who can work, have the funds to work through these problems. The last thing you want is a location going dark where you have 500 or 600 locations. I mean, nobody wants a location to go dark, but it's not really going to pull the system down. You have one of your first 10 go down, people notice.
Yep.
So that, you know, that's where you want to be. We look at also, you know, one of my favorite types of borrowers, and it's funny because financially they're not strong usually, are folks who grew up in the system or a similar system. You have someone who's been a manager at a you know, a deli or a daycare center. You have the
Yeah.
director. These people aren't making $200,000 a year. They're never going to save $300,000. But if they can scrape, you know, kind of the friends and family money together,
Yeah.
they've got the total buy-in. You know, they know what they're doing, they know what they're getting into, and they're great borrowers. They will do everything to make it work. They've been in the industry. They want to be in the industry. I'd say most of the deals that I've had in the past 5 years that went bad, other than just something crazy happening, is someone who gets into a concept. They're 6, 9, 10 months into it, and the calculation is, gee, this is harder than I thought. You know what? I don't want to do this anymore. It's not worth my marriage. I'm just going back to corporate America. This isn't me. You know, they're the folks. How do you underwrite that? How do you see that? So, you know, that's where the underwriting, talking to the borrower comes in, understanding their motivation for doing this. You know, when I see someone leaving corporate America making $150,000, $200,000 a year to pay $300,000 for a $50,000 a year job, I have to ask why.
Right.
Maybe they want to do 10 locations over time. That makes sense. Maybe they're setting up their children. You know, they're taking a soft retirement. Love that. That makes all the sense in the world to me. What kind of scares you is that, oh, I always wanted to own a bed and breakfast or a breakfast restaurant. All these businesses are harder than you think. And, you know, sometimes you just don't want to do it anymore. So, you know, you look for folks that really want to be there or have the ability to get out gracefully, keep the location open,
Yep.
keep running, and bring someone else in. And that's that kind of that backup financial ability as well as the character. You know, you see character in a number of places. You know, background checks, credit reports, just borrower interviews. You know, that's where it comes through. And you know, history. You know, if someone had a bankruptcy 15 years ago when they got out of college because they had their spring break on a credit card, we all do stupid things. But, the answer of, oh, the business just didn't work out, so I had to shut it down. That's scary. That's a different level. I often tell people, what's our credit policy? It depends. Nothing is set in stone. Everything, it's like an abstract puzzle. You really don't know what you have till you have all the pieces on the table.
Yep.
Because some things don't sound important until something else comes up. And Jim mentioned it. The underwriting now is much more sophisticated. 10 years ago, people fog a mirror, they would get a loan. Now, the lenders are smarter, the SBA is smarter, the franchisors are smarter. There's more technology out there, and everyone's kind of improved their game. I mean, one of the things Jim mentioned it, and I agree with him on the projections, but I like projections that are canned, but the structure, not the actual numbers, because that structure gives me a sense for what comes together to make success. And you hope that your franchisee can fill in the blanks. They can fill in the cost of goods. They can fill in the seasonality, the visits per day, whatever the metrics are. Show me how it comes together. Now, I don't expect a franchisee to be an Excel genius, but I want them to know what went into those numbers. It helps us understand it. It helps them understand it. It gives you a sense for the true cash cycle. You can be the most profitable business in the world, but if the money doesn't come for 9 months, it doesn't matter. You're out of business before you even started. So that's the importance there. So, that's one thing. And I've built them for other people. I've seen franchises that do great. If you don't have one, SCORE has a great Excel spreadsheet out there for projections that anyone can break it down and kind of make it their own. It's a great starting point. I've plagiarized the heck out of that a few times as well.
For folks who don't know, SCORE is a resource that's put out by SBA to help folks develop their business plans. It's an acronym of SCORE, SCORE.
Yes, great. Just look for the extra piece. If you literally don't have a secret sauce, but you can give someone kind of that mini business school, kind of show them how all the numbers come together, show them what numbers they have to pay attention to, build them a dashboard of the 6 or 8 things you should look at every day. That goes a long way. That really makes the difference. And it's the transparency the lenders are looking for. If I had a new concept come to me a few years back, and it just didn't make sense. But then they put numbers on the table of 2 years of numbers for the first 10 stores monthly. And it made sense. You could really see how the business ramps up, what the important financial aspects were, and you're able to kind of match that to your underwriting. So the more we know, the more we understand, the better the chances of the franchisee getting the loan and you growing, because we do 2 or 3, Jim does 2 or 3. Next thing you know, you've got 10 new locations, all doing well. But if you don't do that and they just cash in their savings bonds and throw a bunch of money at it, it might not work out as well.
Yeah, that's really interesting, just how you kind of break down borrowers. And if I was someone on the call listening to that, I'd feel tremendously encouraged for someone to be able to sit down with you to think that they're not just going to look at a number on a piece of paper. They're actually going to understand my position and how I'm approaching the business, and where I am as a business owner. I think that's tremendously refreshing. So if I was hearing that as a franchisor or franchisee on the call, I would definitely want to have a conversation with you. We talked a little bit here now about the borrowers. You started to talk a little bit about the brands already, and how you look at those in terms of the success rates. We know that you're obviously using the fund reports and the scores. How do you give us a little bit more? And you've talked about it already about comfort level with a brand. You've touched on them, but what's important to you from on the brand level? Obviously, you said item 19, transparency, fund scores. Anything else that comes to mind that's super important for the brands to just pay attention to?
That's really it.
Yeah.
I mean, that's pretty much the financial stuff. Kind of the other piece is, give us a sense for how you judge your franchisees. In your experience, what do they need to be successful? Some concepts you think, wow, they don't have to ever touch a sandwich, but they have to be outgoing salespeople, or whatever that thing is that makes them successful. Let us know. Make sure they know why they were picked. That's important. What do you do to kind of keep track of who's doing well, who isn't? What sort of coaching do you offer? When do you know kind of the business is off the rails, and
Yeah.
when do you step in? Give us that sense. I worked with a concept years ago, and they had a group of very successful franchisees, and very well off because they had been successful. And this group of people would actually come in and take over locations that weren't doing well. They'd even buy them out. They get them back up to speed and sell them in 2 or 3 years. Everybody wins in that. Somebody kind of goes back to the day job. They get out from under a big loan. You have a location that hasn't closed. So, there are a lot of ways to get there. And that's really, show us how you're going to keep these stores, locations, centers, however you identify it, how are you going to keep them open?
Yeah. Awesome. Let's wrap up and just take a little peek at this year. And in terms of like building the business and what you're looking for, what kind of guidance are you giving to your biz dev folks in 2022, and the types of brands that they should key on, and what you look for and kind of your comfort level there?
Wow, there's so many brands. Yeah, real quick, I'll tell them, pull a list of fund scores, go 600 and above.
Yep.
Stay away from certain industries.
Yep.
Target others, and then maybe go after the concepts without a fund. Maybe it's a business that we really understand, and one I've been doing for years is daycare.
Yep.
We'll do a franchise or a non-franchise just because we have so much experience in the space. So you come up with you're the new franchise. Maybe you have 5 locations and you're growing. The model is very similar. Kind of the tuition rates, the financial, it all kind of makes sense. It's just a matter of what you teach and how you package it. So we can get comfortable with a newer concept in systems. Maybe I don't know Jim's portfolio, but maybe they have the really comfortable with QSRs. Maybe that's like the best thing. So if you're a new one, they might be the perfect lender. Conversely, you walk into a lender who did one daycare center 10 years ago and it went under, they might never touch another one, no matter.
Absolutely right.
So, every lender has that ability too, but we like food. Everyone's going to keep eating, love the services. Anything medical related these days, I think, is a really good place. They're hard to finance. You have to really understand the cash cycle.
Yep.
So, you know, the less you are that typical widget manufacturer, restaurant kind of a business, better job you need to do in explaining kind of how the money comes in and what the timeframes look like. You know, a visiting angels, you know, day one, nobody knows what you're financing. What is it, a computer and advertising? So that's not a typical business model. But you see a business like that that's 5 or 10 years old. You know, you're like, how do I get this for one of my kids? Like,
Yeah, the numbers look
how do I
fantastic.
get that? So, you know, tell that story. If you're not kind of the typical business, tell us why or how.
Yeah, you've just kind of led into my next question, was just kind of insights or advice for smaller brands versus bigger ones. And you just pretty much said it there in terms of, you know, forging close relationships with folks like you, and, you know, just being transparent and disclosing information is really important. Anything else that comes to mind there, and how smaller folks should act in this space?
No, you know, I think you've said it all. I mean, I thought, you know, I was going to be a bit of a jokester and just say what Jim said. Yeah, I'm with him. So, you know, the openness, tell the story, sell the bank a franchise. You know, think of it that way. Try to sell me one. You can sell me, trust me, I can get anyone approved at that point. Because I'm a stickler on certain things, but that's the big piece. If we can understand it, if you can explain it to your underwriters, you're there. And
Yep.
Look, all the banks aren't going to do all the deals, and they're not going to do all of them, but you get 3, 5, 6 banks who each do a couple deals, you can grow, and
Yep.
somebody is going to figure it out and do more.
Yeah, I think that's a fantastic message to kind of leave the folks with, is that really you're not going to have one lender that's going to solve every problem for you. You're going to have different needs. You're going to have startups, second, third units. You're going to have refreshes, remodels, transfers, different regions of the country. So it behooves everyone on the call to build these relationships and multiple relationships. Call Jim and Frank and source a lot of other different connections, because you really never know who you're going to fit in with. And as Frank said, you're going to need multiple lenders to kind of get you to that stage where you're really now growing and getting past 50, 100 units and really becoming where you guys want to go. Frank, thanks so much for your insight on that. I want to open it up for any questions that we might have. I'm going to check the chat. I don't think there were any questions in the chat box. So if you guys have any direct questions that you want to shout out on the webinar now, please let those go into the chat or raise your hand, and we'll open up for conversations. But if not, if you guys just want to reach out directly to Jim or Frank, their contact information is on the screen. And really, for all the lenders or the franchisors that are on here, I think it would be great to, you know, have a conversation with one or both of these guys, especially for, I know some of the folks that are in the emerging group. We are right around 40, 50 units. Some of you guys are a little bit bigger, but all of you I know are trying to make new connections in the lending space. And these two are one of the top that we deal with in SBA and franchising. So thank you again, Jim and Frank, for coming on. I don't see any questions here. Melinda hasn't messaged me. So apart from anyone raising their hand now, I think that'll be the end of the session today. Thank you for joining us. We do have a recording, so go ahead and email us if you'd like that. And of course, we're here at FRANdata for any needs that you have in the franchise space. My contact information is on the screen as well, so please feel free to reach out. All right, thanks so much, guys. Have a great one.
All right, have a great afternoon.
Thanks, Paul. Thanks, Frank.
Thank you, Jim. Thank you, Frank.